Welcome back again. I'm Trading Core, and today we're going to continue yesterday's topics that we left behind. So without further ado, let's get started. Market structure. Market structure tells you what the market is doing. Higher highs and higher lows mean bullish structure. Lower highs and lower lows mean bearish structure. This isn't revolutionary, but what happens at the turning points is market structure shift. An MSS signals a potential trend reversal. In a bullish trend, price makes higher highs. When price fails to make a new higher high and instead breaks below the most recent higher low with strong momentum, that's an MSS to the downside. The structure shifted. The trend might be reversing. On Bank Nifty weekly charts, when price was making higher highs at 56,565, 56,769, then formed a lower high at 56,000 and broke below the higher low at 56,000 with heavy volume, that MSS told you institutional money changed direction. They're no longer buying. They're distributing and going short. Break of structure. A BOS indicates trend continuation. If Nifty is in an uptrend making higher highs and higher lows, when price pulls back to the last higher low and then breaks above the most recent higher high, that's a BOS, confirming the bullish trend continues. This is your signal that the trend has strength. The difference between MSS and BOS determines whether you're trading a reversal or continuation. MSS breaks the pattern of higher highs or lower lows. BOS confirms the pattern continues. How to identify MSS versus BOS? In an uptrend on Reliance Industries' daily chart, mark each higher high and higher low. When price retraces to test the 1,380 level, last higher low, and then breaks above the 1,390 high, that's BOS. Buy the pullback after this break. But if price instead fails at 1393, forms a lower high, and breaks below 1379 with strong bearish candles showing displacement, that's MSS. The bullish structure broke. Now you're looking for short opportunities as structure shifts bearish. Displacement, smart money, footprints. Displacement is fast, aggressive price movement that breaks through key levels with momentum. This isn't three small candles grinding higher. This is three large-bodied candles with minimal wicks eating through 100 points on Nifty in 15 minutes. Displacement reveals institutional order flow. When HDFC Bank jumps from 1,640 to 1,665 in three consecutive 5-minute candles with full bodies and no upper wicks, that's smart money entering with size. Retail traders don't create displacement. Institutions do. Characteristics of valid displacement. 1. Minimum 3 consecutive candles in the same direction. 2. Large bodies, small or no wicks. 3. Breaks through recent swing high or low. 4. Covers significant distance in short time. 5. Creates fair value gaps between candles. 6. Higher volume than preceding candles. After displacement higher from a demand zone, price rarely returns to fill that inefficiency immediately. Smart money showed their hand. The move has conviction. This is where you align your trades. And now we have completed the 6 advanced price action concepts. But since you're here to learn, I'm going to talk about 3 another advanced price action concepts that will help you make profit in the market. Trading. Displacement. On TCS stock, if price consolidates between 3,030 to 3,060 for multiple sessions, then suddenly displaces upward to 3,090 in 3 candles during the Frankfurt kill zone, 1:30 p.m. IST. That displacement from the range tells you institutions accumulated positions and are now delivering price higher. Your entry isn't chasing the displacement. You wait for price to pull back to the origin of that displacement, to the 3,060 level, where the breakout originated, find an order block or fair value gap there, and enter long targeting the next liquidity pool above. Or mitigation. Blocks. The failed order. Block. A mitigation block is an order block that temporarily reverses price but fails to create a new swing high or low before price blows through it. The order block tried to reverse the trend but failed. That failure zone becomes a mitigation block. Bearish mitigation block. Nifty is in an uptrend. Price creates a bullish order block at 25,150 to 25,190, pulls back, tests it, bounces to 19,520, but fails to make a new higher high above 25,237. Instead, price reverses, breaks below the bullish order block, and shifts structure bearish. That bullish order block from 25,150 to 25,190 that failed to continue the uptrend becomes a bearish mitigation block. Traders who bought there are now underwater. When price returns to 25,150 to 25,190, trapped longs exit and new shorts enter. This zone offers high probability short entries. Bullish mitigation block. TCS is in a downtrend. A bearish order block forms at 3,320 to 3,360. Price rallies from this level to 3,200, but fails to make a new lower low below 3,280. Price then breaks above the bearish order block and shifts structure bullish. The failed bearish order block at 3,320 to 3,360 becomes a bullish mitigation block. Shorts who entered there are trapped. When price returns to 3,320 to 3,360, those shorts cover and new longs enter. This is your entry zone. Trading mitigation blocks. The difference between a mitigation block and a regular order block is the failure. The order block attempted to reverse price but couldn't generate a new swing high or low. That failure makes it weaker for the original direction but powerful for the new direction. Mitigation blocks work best when aligned with higher time frame structure shifts. If the daily chart shows MSS bearish, and a bearish mitigation block forms on the 15-minute chart, that mitigation block offers a precise entry for the larger bearish trend. Breaker blocks. Failed support becomes resistance. A breaker block is an order block that gets broken and flipped. Support becomes resistance. Resistance becomes support. When price closes through an order block with conviction, that block doesn't disappear. It transforms into a breaker block, offering entries on the retest from the opposite side. Bullish breaker. Block. Reliance Industries is in a downtrend making lower lows. Price forms a bearish order block at 1382 to 1388. Institutions sold heavily. Price drops to 1,360, but then reverses, breaks above the bearish order block with displacement, and closes at 1,390. That broken bearish order block at 1382-1388 now becomes a bullish breaker block. What was resistance becomes support. When price pulls back to retest 1,382 to 1,388, buyers defend this zone. Your long entry sits here with stops below 13,822. Bearish breaker. Block. Bank Nifty. Uptrend creates a bullish order block at 56,538 to 56,573, where institutions bought. Price rallies to 56,760, but then breaks below the bullish order block with strong selling, closing at 56,508. The broken bullish order block becomes a bearish breaker block. Prior support at 56,538 to 56,573 transforms into resistance. Price retraces to 56,573. Sellers enter here. Your short entry is at 56,540, with stops above 56,575 targeting the next sell-side liquidity below. Why breaker blocks? Work. Institutional orders that created the original order block got triggered. But not all orders filled. When price breaks through and later returns, remaining unfilled orders activate from the opposite direction. Plus, traders who got trapped in losing positions see the flip and trade accordingly. Breaker blocks signal that market structure shifted. The trend changed. What was once a buying zone where longs added positions is now where shorts add positions. And for Bank Nifty, these are the levels. And if price opens gap up, let it fall up to 57,404 and wait for confirmation for the reversal and then take the entry. And if gap down, let the price fall for 57,238 and then take entry when it rises and the strong levels are 58,000 and 57,000. Index levels. To watch. For Nifty, these are the levels. If price opens, gap up, and if it falls, wait for the price to retest the 25,663 levels and then wait for reversal, and that's the entry. If it opens gap down, let and the price falls, wait for it to drop at 25,508. And from there, look for reversal confirmations. And 26,000 is the strong resistance. And 25,510 is the strong support. And that's all for this video. Hope you understand the concepts, and if you want a deep dive of these price action concepts, comment down below. Make sure to like, subscribe, and hit the bell icon for upcoming videos. See you in the next video.